This meeting is now being recorded. Hello. Good afternoon, everyone. I'm Mei Moy, Director of Marketing at FRANdata. I wanted to thank you for attending our webinar today and begin with some minor housekeeping details and a couple of tips on using Global Meet. Attendees of this session will be placed on mute for the duration of Ron's presentation. If you have any questions during the meeting, feel free to click on the Q&A button found on the top of your screen, and he will either address them during or after the presentation. Today's webinar will be recorded. Additionally, I suggest you expand your view of the Global Meet window in order to fully see the presentation. To do so, click on the button found on the top right-hand side of the window that says Full Screen and pick 100%. After doing so, click on the icon with 4 arrows pointing away from a square. That should expand the presentation to fit the Global Meet window. Now, in order to access the Q&A button to ask a question, you will need to shrink the screen back to its previous size. All you need to do is, while in full screen mode, click on the icon with the arrows pointing towards the square on the top center of your screen, and that should bring you back to the Global Meet dashboard. Now, with that being said, let me start by introducing you to our speaker today, Ronald Feldman, who is the Chief Development Officer at FRANdata. Ron utilizes his knowledge and experience with franchise finance to improve the flow of capital to the franchise community. Ron is also principal at Franchise America Finance and Siegel Financial Group. Prior to his time at FRANdata, Ron was Executive Vice President and Chief Operating Officer of Response USA, a publicly traded alarm systems company. Ron and his wife were also one of the early Goddard School franchisees. They successfully owned, operated, and sold their Goddard School in 2007. Ron has been published numerous times in trade magazines and is the instructor of choice and subject matter expert on financing and capital access to the International Franchise Association. Now, without further ado, let me pass the floor to our CDO, who is both our in-house franchise finance expert and also our resident wine connoisseur, Ron Feldman.
Thank you, Mei, and I assure you all that I'm not drinking yet, but I might be when this webinar is over. I'm looking at the attendees, and I want to first thank those of you that helped us develop this report. We used a lot of lender input in designing this analysis, and I want to just give a shout out. You know who you are. I'm not going to call you out by name. So welcome, everybody, and what we're going to be talking about today is the brand new fund report, which allows us, meaning FRANdata, to help you, the lender, underwrite brands. Just to give you some idea of what the lending potential is in franchising, there's 3,500 active brands, 200,000 franchisees, almost 800,000 franchise establishments, and there's almost $3 billion of active SBA loans going on right now. Just this year, we have expansion of 45,000 new franchise units and 25,000 unit transfers, and there's going to be as the generations move, there's going to be a lot more transfers over the next few years as you go generationally and moving forward. So what is franchising's advantage to lending? It really comes down to the fact that there's uniformity and conformity. There's a documented performance history of what the brands have done, and you really need to just, as a lender, see how your borrower fits into the brand's model, and you can generally mitigate your risk by making sure that you put enough weight on both of those sides. So here we have, the balance scale, and you have to underwrite the borrower and the brand, and you see that we've got it at 50-50 here. It's not always at 50-50, and I would bet if I could take a poll of hands right now that most every banker would put the borrower at 75 or 80 and the brand at 20 or 25. And what I encourage you to do during this presentation is to have an open mind and understand why we believe that more weight should be thrown at the brand in certain instances, not in all instances, and you'll understand that more as we go through the presentation. The fund report score and the accompanying report is the best predictor of future performance of a franchise system that publicly available information can provide. And we're going to talk about public versus private information. We basically use a proprietary model that we use to evaluate 13 different credit risk categories. We use up to a 10-year history depending on how long that brand's been franchising. And we look at both the brand, the franchisor financials, the system financials and metrics that affect credit risk. And it's prepared by our team, which has looked at 40,000 FDDs and has underwritten hundreds, if not thousands, of brands for lenders and for bank credit reports. So where do you get your information as a lender? It's everywhere, right? You don't want to underwrite a loan based on what's in Wikipedia or Google or unhappy franchisee. Maybe you want to look there. But you really need to have good and solid information. What we aim to do here is to provide you with that type of information that can help you mitigate your risk in making franchise loans. So what have we used up till now? We've used the SBA data. So what's the truth about that SBA data? Well, first, the information was provided on a voluntary basis by lenders. Not all franchise loans are included in that data. There is no common numbering system for franchise brands. If you looked at a brand like the UPS store, they had 6 or 7 different numbers, so you have no idea which one of those numbers got used. And the SBA itself disavowed the integrity of the data, and you can see this statement that they make on the bottom of the spreadsheet, and I'll call out the red. As such, the SBA cannot certify the statistical reliability of this information. It's also a 10-year moving average, doesn't talk about trends, and the data hasn't been updated in 4 years. So that data, it just is not reliable and really shouldn't be used in underwriting franchise companies. Here's a report that we did. We did an enhanced SBA loan performance analysis for Papa Murphy's, which is a 1,200 or 1,300 unit chain now, where the SBA published data showed 178 loans and almost $38 million dispersed with an 8.43% failure rate. We went back and basically geo-mined their franchisee database to every location they'd had, and we identified 283 loans, which is 105 loans missed, almost $20 million of loans missed in the SBA data, and the failure rate percentage was overstated by 42%. So this just shows you in one example why that data really is not very reliable. So why is it the only thing used? Because there's not ever been a better option until right now. So let's talk about the fund report. As I said before, there's public information, which is what is in the fund report. It is only based on information that is in the public domain. There's been no interaction between the franchisor and FRANdata in creating this, and the franchisor has had no financial interest in creating it. On confidential information, there's the bank credit report, which many of you are already familiar with. That does contain a whole lot of confidential information. It is paid for by the franchisor. but it is looked at objectively by FRANdata. The bank credit report requires the franchisor to put a lot of hours into giving us the information that we need to underwrite the brand, and those of you that have seen them know that only about 10% of what is in the bank credit report is actually in the FDD. The issue, though, is there's 3,500 brands and only a few hundred of them have invested in bank credit reports, so how do we look at the rest of them? And that's why, based on feedback from you, the lending community, we've created the fund report. What is a fund report? It analyzes 13 key performance metrics broken out by outcomes, performance, and franchisor performance. So if you look at the unit level outcomes, we look at the historical success rate, we look at a projected success rate, and we look at what resale activity level is to see if it's healthy for a brand of that size. And let me pause now and say that the fund report is only viable for brands, and we will not do one for brands that have not been franchising for at least 5 years and have 50 units open. If it is an emerging brand, the fund report is not going to be used. And we'll go into each of these other metrics as we go forward, but you'll see there's a scoring model. 650 points is where we weight the franchise system performance, and 350 points is where we rate the franchisor and the support level performance. And obviously the best score you can get is 950 in the report. If you look at the front page of the report, you'll see that we give you the score right away because everybody only wants to read the cliff notes. We give you some basic information about the brand. If they're running corporate units, this is Jimmy John's. Print's kind of small, but Jimmy John's is in 41 states, and they have a national footprint. And you'll see where the density is of the units based on the color coding of the mat. You'll see the historical success rate, and you'll see where they rank in terms of quintiles based on all of franchising. And you'll see how we now take that score and we measure it. And where we've done is we now have a big enough sample where we can actually break it out. If the score is less than 550, they are the poorest performers. Between 550 and 850 would be average, below average, average, and a little above average. And 850 and higher would be the highest performers. I want to qualify this statement here by saying that there are brands that will score very poorly because their disclosure is terrible. And there are good brands that will have bad scores. So it's not necessarily a litmus test, but it should be a flag raising to you if there's a low score to dig a little deeper, or because they're not transparent in their presentation and in their disclosure, you might want to look for another loan to make. But if the score is high, 850 or higher, odds are that's going to be a pretty good loan provided you have the right borrower for that brand. Let's look at a sample of the key metrics now. So projected unit success rate is where we take the 8 to 10 year history we've looked at and we've weighted the last 3 years significantly differently, and this is all done with our algorithm. And we can actually project out what the trend is in terms of unit success rate going forward. Why is that important? Because that unit is what is going to drive your repayment as a lender. So if you're lending to unit number 4 for somebody, the historical and projected rate together comprise 450 points of the 950. So you can see we've weighed that very, very, very highly. The resale activity level. There's a healthy resale activity percentage and there is a less than healthy resale activity percentage. So we look into that and we measure it along the life cycle of the brand and its system size, and we look to see if that is a healthy level. Same-store sales. Obviously, that's something everybody looks at. Unfortunately, not all brands report same-store sales in their publicly available information. Sometimes we have to dig a little deeper. If it's a public company, it might be in the 10K, but it might not be in the FDD. So we actually search for any publicly available same-store sales data, and we would put that into our algorithm again and give it a score. Recurring revenue self-sufficiency, very, very important metric. And that really what we're looking at there is whether there is enough cash flow from recurring revenue to cover all the G&A and operations and support of that brand. If not, then they're relying on initial franchise fees to cover the overhead of running the business, and that is generally a bigger risk factor. So we actually give brands credit for being recurring revenue self-sufficient. So here's where we look at things, and again, we have it at the 50-50 here, and you've got to weigh it based on your individual loan as to where you want to tip that scale. You're going to do your normal underwriting of the borrower, FICO, liquidity, resume, experience, outside income. If it's an SBA loan, obviously citizenship and eligibility issues. And we would underwrite the brand for you. And between the two of those things together, you should be able to create a very good credit package for your underwriters if you're a BDO. And if you're an underwriter, this should give you validation of some of the information that is in the loan application. What does it do? It gives you better outcomes. It gives you better underwriting, certainly better documentation, much better visibility and transparency to regulators. This is one of the things that when we had our little focus group to create this report, it was very important to the group that there be something in their file for both SBA auditors and FDIC regulators that come in and audit portfolios that might ask the question, well, why did you make this loan to this borrower in this brand? And having that report in there is certainly something that is a positive. The other thing is once you've got a brand underwritten, it'll be a lot faster for you to approve more loans inside that brand so that you can move the ball forward quicker. Here's a list of a bunch of the reports that we've got created. You'll see a lot of big brands there. You'll see some, I don't want to call them emerging, but you'll see them, a couple of smaller brands there, but they've all met that litmus test that we use of 5 years and 50 units. And there's some obscure brands really because some of the early adopters of this report have requested them. It's very important for you to know that we have now covered every sector in franchising. So where we don't really have BCRs available for the hotel and lodging industry, we do have fund reports available for that industry. So if any of you are doing a lot of hotels, something you might want to look into once you see that these things are available. How do you get a fund report? Well, right now we're just doing a soft launch of these things. You just email or call and order one-off reports. They cost $499. It's priced so that it is an appraisal type expense. Banks that have adopted early, some are passing through either the whole cost or a portion of that cost to their borrower. Others are just using it as a cost of underwriting. That's obviously an individual decision that you would need to make. They will be available directly from the franchise registry website within the next 4 weeks. We're hoping sooner than that, but I wanted to hedge and make sure we managed everybody's expectations properly. And in order to do that, there will be a button when you get to that brand that says buy a fund report, and you can do that. And it's all paperless, and it'll be available for you to download immediately. And then the other thing we're doing is we are looking at we're not looking at, but we're putting together a complete subscription program for 2016 where you would get access to all of the fund reports, some of the fund reports, or a certain number per month based on a monthly subscription. So stay tuned for that. We are in the midst of putting that together, and it will be rolled out in the beginning of 2016. some common questions that we've gotten in the beginning. And I see a question, can we get a sample report? Yes, everyone's going to get a link to the Jimmy John's sample that we did. Now, I will tell you that sample is based on the 2014 FDD, not the 2015 FDD. The current one is available for purchase, but you'll at least get a flavor for what it is. Question one is, can I share this with my borrower? There's nothing in there that says that the borrower couldn't get at that information. It's really a decision that you need to make internally. Whereas the bank credit report, obviously everyone who's ever looked at one has signed a non-disclosure agreement to never share that with the borrower. So that's really a decision that you would need to make individually. And in my opinion, what point in the borrowing process should I get a fund? I would get it earlier rather than later, or you might want to use the fund as a business development tool where you'll be able to search for brands that have scores higher than X, and you'll be able to get those reports as a business development tool. If you're putting a package together for your underwriter, the fund report really makes it a lot easier for you as a BDO. And if you are an underwriter, the fund report obviously is a good document to validate the information in the package that you've got and to keep in the file for future audit by both SBA and the FDIC. The fund reports are going to be created each year as the FDDs are released. So the report will have an end date on it. And we will work diligently, as most of you who are franchise lenders know, the FDDs come out usually in a flurry in the second quarter, so we will have assets deployed to try and get them done as quickly as possible once those new FDDs come out. But the ones that are out there are out there now and are good at least until the second quarter of next year when the FDDs come out, unless they're not on a calendar year basis. And a little technical glitch here. Discounts on multiple orders, well, that we talked about a little earlier, and that's really what the subscription model will be. If you do want to order a group of fund reports now, before we have the subscription model, you can speak with one of our staff, and we will do our best to accommodate that, and there are some discounts available should you want to order in multiples of 10 or more. So that is the presentation. I tried to keep it less than 30 minutes, and I think I did a pretty good job of that. I didn't want to take too much of all of your days. If anyone has any questions now, I think I addressed a couple of questions that we had, either with the frequently asked questions that I talked about and the questions that did come in. Are there any other questions? I don't see any coming in. Oh. Okay. Well, with that, I encourage you all to, you'll all be getting an email from us with a link to that Jimmy John's report, and also the ability for you to click and purchase some fund reports. Thank you all for your time, and I look forward to speaking with you all later. Take care.